Morning, everyone. Thanks for being here today. I thought we would make this kind of interactive and fun. And so what we're going to do is, does everybody have their phones nearby? Sure, we all do. We're in the mortgage business. So I'm going to share my screen. And this first step, I'm going to put up some instructions. And we're going to play an interactive trivia game where you're going to vote and answer some trivia questions. There's going to be 10 questions. You all will have a chance to test your knowledge, and then we'll get into kind of how the appraisal gap strategy works. So, according to NAR, first-time homebuyers' share of the market dropped to a record low of what? Down from 34% in 2021. What was the share of first-time homebuyers in 2022? 26%. All right, great, we're learning. That's right, first-time homebuyers, their share of the market dropped to a record low of 26%, down from 34% in 2021, and their average age increased to an all-time high, 36 years, up from 33 years a year ago. So here's the leaderboard. Here's what it's gonna look like. The faster you answer, the more points you get. Obviously, being accurate is going to help as well. So far, Lisa and Sarah are in the lead. Go. All right, let's go with number 2. In 2022, the average down payment for first-time homebuyers was 6 to 7%. What was the average down payment for repeat buyers? 17%. Good job. The typical down payment for first-time home buyers was 6%, while the typical down payment for repeat buyers was 17%. All right, next question. Hope we're getting the hang of it. In Virginia, what percentage of first-time home buyers use private mortgage insurance to purchase their home in 2022? $61%. Good job. We're all learning. Love it. Right, 61%. This is specific to Virginia. I know it's a little bit small, but yeah, 61%. They had an average credit score of 752. The average loan amount was around $378,000, and there were just shy of 30,000 people that purchased a home with mortgage insurance. All right. Next question. How many years would it take for a Virginia household earning the median income of $80,268 to save 20% plus closing costs for a $412,000 home? Which, by the way, those are the averages for Virginia. One person got it right, 35 years. See how you do on the next question. Again, it's a little bit small, but it does show for Maryland, if somebody were to save up enough to put down 20% as a down payment, in Maryland it'd be 31, Virginia it'd be 33, and you can see some of these surrounding states, it's quite a long time. We certainly don't want to wait that long if there's an option to help somebody get into a home sooner. We'll go ahead. How many years would it take the same Virginia household to save for a down payment if they were only putting 5% down? The same scenario, making $80,000 a year, buying a home that's around $412,000. Good job, 12 years. Huge difference in terms of helping people to reach their goals of getting into a home much sooner. All right, number 6. According to the National Association of Realtors, Hurdles to Home Ownership Report, what percentage of the home price did most participants think is required for a down payment? Good job. 16% or more. I find that so interesting, and we're going to get into the appraisal gap in just a minute, but I think it's fascinating that there are more people that are actually closer to being able to be qualified to purchase a home than they may even realize. And I think that's our job to educate everyone on where they might be. All right. True or false? Private mortgage insurance can be used with the Housing Finance Agency programs, such as Virginia Housing or DC Open Doors, any of the ones that you typically work with. Good job. True. Glad everybody got that. There are options in the strategy that we're going to talk about in just a minute. You can use it with all of these options. All right. Closing in, I'm excited to see who our winners will be. What is the minimum down payment allowed for a $1.1 million sales price? It throws people off sometimes. That's right. Good job. Any more, and we'll see the winners. RHMI can help overcome appraisal gaps and can reduce or even eliminate the need for the borrower to come up with extra cash at closing. True or false? Great job, 100%, got it right. This is really what we wanted to focus on today, and I'll be sending this out to Allie, and she'll share it with the group. But really what we wanted to illustrate, again, there's so many people that think, potential home buyers that think that they need to put down 20% to get into a home, or that they would have to go FHA, but that's just not the case. What this example is showing us here is that for the same exact purchase price of $420,000, the borrower could end up with the same monthly payment even if they were putting less money down. So let's say that their appraisal came in a little bit short. Say instead of coming in at $420,000, it came in at $380,000. That doesn't necessarily need to cause the whole entire transaction to kind of, stall. We can help you to restructure your deal, add private mortgage insurance, keep your cash to close almost exactly where it was, by about $2,000 here, and they can still end up at the same monthly payment. Again, all this goes to, down payment planning when you're talking to your referral partners or potential home buyers. There's not nearly, people are really surprised sometimes that they're as close to being able to qualify for a home, and they don't have to come out of pocket with as much cash. So they can save that additional money. It can be in cases, let's say your appraisal didn't come in short. There's still a lot of cases where somebody may want to, it's super competitive to get into the home. Maybe they want to save that additional money, and maybe they want to make improvements or repairs or afford a bigger home. It's a great tool for being able to do that and not really changing the monthly payment too much. So these are some examples. Again, you'll end up with roughly the same monthly payment, but also still saving, hanging on to a lot of that cash. So last question. Find out our winners. What percentage of millennial and Gen Z buyers said personalized service with the ability to meet with a loan officer in person or virtually was important? I love this question. 3 people got it right. 78%. I really like this. I think it means a lot to all of us that are, working on relationships. If you're able to educate your home buyers on this strategy, I think it can go a really long way in terms of helping you to gain that competitive edge, both for winning the deal, helping your referral partners, and most importantly, helping your buyer get into a home. If you ever have any questions on how to structure a scenario, or you're working on kind of payments and working up scenarios, please reach out to me anytime. I'm always here to help, and look forward to hearing from y'all.